You know, you see these headlines pop up, Europe's largest economy fights for its future, and it really makes you stop and think, okay, what's actually going on with Germany's industrial powerhouse?
Exactly. And that's the core question we want to dig into in this deep dive. We're looking closely at the pressures on Germany's industrial sector, using insights from a recent DW News report and some key background data that helps paint the picture.
Right. So the sources seem to show a nation, built on manufacturing might, now hitting some pretty significant headwinds.
Yeah.
We'll start with where that strength came from, then look at the struggles happening right now, like that fertilizer plant they mentioned up north,
That's a key
and
example.
then try to figure out where things might be headed.
Mhm.
So for you listening, the mission here is really to get past those sort of surface level headlines.
Yeah, get underneath them.
Exactly.
Oh, yeah.
Understand the deeper forces reshaping German industry and maybe what it means for other advanced economies too.
Okay, so let's set the scene. Germany's industrial position, historically,
Yeah.
it's been huge. We're talking back in 2021, #3 globally for value added in manufacturing.
Wow, number 3.
Right behind the US and China, much bigger populations, remember, and basically neck and neck with Japan. That tells you something about the scale.
Absolutely. And it wasn't just the output, was it? It was also about the jobs. A huge number of people worked in industry.
Precisely. That's a really important point. If you compare it to the US, Germany still has like almost 1 in 5 workers in manufacturing. That's everyone, shop floor to management.
1 in 5.
In the US, it's less than 1 in 13. That difference alone really highlights how central industry has been to the German economic identity.
And you definitely get a feel for that if you've ever been to the Hanover Messe, that big trade fair, all the
Yeah.
latest tech, the engineering.
Yeah.
It's impressive.
The Hanover Mets is, yeah, it's a powerful symbol. But the DW report points out that even with that image, a lot of German companies are seeing a slowdown. Fewer new orders, revenues dipping. Though, interestingly, overall industrial production hasn't fallen off a cliff compared to just after the pandemic. The machines are still running, maybe just not quite as flat out.
Okay, so the engine's sputtering a bit. What are the main things causing this pressure then?
Well, there are several things kind of hitting at once. Short term, the big one is energy costs soaring, directly linked to the war in Ukraine, obviously.
Right.
And that hits the really energy-hungry sectors, hardest think steel, chemicals, glass, foundational stuff.
Yeah, we heard about that specific case, didn't we? The fertilizer plant in northern Germany. It actually recorded a loss in 2024.
It did. And it's running way below capacity purely because energy is so expensive.
Mm-hmm.
It makes you wonder about its long-term viability, you know?
Absolutely. If your basic costs jump like that, how do you compete?
Exactly. And it's not just cost. Demand is sluggish, too. Key markets. China's recovery post-pandemic hasn't been maybe as strong as hoped, and Europe itself is still dealing with the economic fallout from the war.
Uh-huh. Less appetite for German goods.
And then there's the competition angle. This feels like a big shift.
How so?
Well, China used to be mainly a buyer of German industrial goods now. They're making more and more of that stuff themselves.
Oh, okay.
And they're not just making it for themselves, they're competing directly with German firms in other countries, too. You could apparently see that at the Hanover Fair, more sophisticated competitors, especially from China.
Germany always had that ace up its sleeve, though the Made in Germany quality label. You paid more, but you got the best. Is that fading?
It's definitely under pressure. For one, competitors have improved their quality. The gap isn't always as wide as it once was. And second, in a tough global market, buyers are more price sensitive.
Yeah.
Is that slightly better quality worth the higher price tag?
Yeah.
Maybe not always.
Hmm.
Plus, you always hear German businesses talk about bureaucracy and red tape. That adds costs and slows things down, too.
So high costs, sluggish demand, tougher competition, bureaucracy. It sounds like companies might be thinking twice about investing in Germany right now.
The data seems to back that up. The DW report talks about investment hesitancy. Companies waiting, seeing what happens.
Yeah.
Or in some cases, already making cuts. Look at Volkswagen planning to cut, 35,000 positions by 2030? And lots of auto suppliers are struggling.
And that 2024 survey you mentioned?
Read an EY survey.
Right.
It found only 13% of mid to large German manufacturers plan to expand in Germany. Almost half were looking overseas, and nearly a third were even thinking about moving existing jobs.
Wow. And the car industry has its own specific nightmare, doesn't it? That massive shift away from combustion engines.
That's a huge one. The transition to electric vehicles, other new drive systems. It's a massive disruption
Right.
for a sector that's just so central to Germany's economy. They were exactly first movers on EVs,
No, they weren't.
and that transition challenge is definitely part of why we're seeing job losses. Over 100,000 manufacturing jobs gone between late 2023 and the end of 2024. That's about 1.5% of the total. It's pushing unemployment up, and forecasts suggest it'll stay near those pandemic highs for a couple more years.
It really feels like a major turning point. But the report also mentioned that this isn't maybe totally out of the blue, that Germany, like other wealthy countries, has kind of been deindustrializing for a while.
That's such an important piece of context. Yes, the current situation feels acute, but there's a longer trend. Over the last 15 years, total jobs in Germany grew by like 26%. Pretty healthy.
Okay.
But manufacturing jobs, only up 6% in that time. And go back further, like 70 years ago, over 40% of German workers were in production. It's much lower now.
And this isn't just Germany, right? It's happening across advanced economies. What's driving that bigger picture?
Yeah, it's a wider phenomenon. You've got technology boosting productivity, fewer workers needed for the same output. You've got globalization, access to cheaper labor elsewhere,
Mm-hmm.
and critically, the rise of the service economy. Finance, tech, healthcare. That's where a lot of the growth is. Adam Posen from the Peterson Institute has an interesting take. He suggests Germany held onto its industrial base longer, partly because it made exactly the kind of high-end machinery and goods China desperately needed in the late 90s, early 2000s.
Ah, so they had a specific advantage then.
Kind of.
Mm.
And Posen's argument is that maybe what we're seeing now is Germany sort of catching up to the deindustrialization trend that hit other places earlier.
Fascinating. And these economic shifts, they never happen in a vacuum, do they? They always stir things up politically.
Absolutely.
Yeah.
The report touches on this, how much political weight manufacturing jobs still carry. You saw it in the U.S. with Trump's tariffs, that whole reborn American industry narrative.
Yeah, definitely.
There's this powerful idea, maybe stronger in the U.S., that manufacturing is the main path to a good life if you don't have a degree. It's maybe less true in Germany with its structured apprenticeships and stronger unions, but the sentiment is there.
And even in the U.S., aren't the wages in manufacturing not quite what they used to be compared to other sectors?
That wage premium has definitely shrunk. But the idea persists. And these anxieties about jobs, about change, they can fuel support for populist parties.
Like the AfD in Germany, which the report mentions. How does that link?
Well, parties like the AfD often directly address those fears about job losses and economic decline. And they propose radical solutions, like potentially leaving the EU.
Which would be huge for Germany's trade.
Massive. Given how export-oriented German industry is, Posen actually argues against this nostalgia for a manufacturing golden era. He says it's powerful, but maybe misleading.
How so?
He points out that even within manufacturing today in rich countries, many jobs are actually service roles, logistics, design, sales, R&D, it's not all assembly lines.
Right, the lines get blurred. So, okay, Germany's facing these pressures. What are they actually doing about it? That fertilizer plant, SKW Kiesteritz, seems like a test case.
It really is.
Yeah.
SKW sums up the dilemma. High energy costs, pressure to decarbonize, tough competition, especially from places like Russia with cheaper gas. That government levy on gas storage hit them hard. The new government plans to scrap it, which should help SKW a bit.
And SKW is arguing they're system relevant, right? What does that mean in practice?
Basically, they're saying they're essential for agriculture, food security. They provide vital fertilizers. And they point to the wider chemical sector, 340,000 direct jobs. It creates this real tension. Do you let the market decide, or does the government step in?
It's a tough call, because the last government seemed pretty reluctant to bail companies out, didn't they? Even things like flying taxis or solar panel makers.
Yeah, they drew a line there even when those companies argued they were system relevant for the green transition, but bailing out, say, the auto industry. That's different.
Why? Just the sheer size.
Guys, absolutely. Almost
Yeah.
800,000 direct jobs. The political fallout would be immense. And the current government seems more open to supporting key sectors.
How? What are they proposing?
Things like tax breaks, trying to lower energy prices specifically for industry, maybe even helping fund carbon capture technology for heavy emitters.
But that kind of support won't be cheap or easy, will it? There'll be pushback. Conflicts with climate goals, maybe?
For sure. Big questions about cost, effectiveness, climate impact. And at the same time, there's this huge need to invest in future industries. AI, robotics.
Yeah.
And there's a worry noted in the report that Germany's private sector hasn't been investing enough in these cutting-edge areas, even though they have strong university research.
Why the lag in investment?
One structural problem mentioned in the context of the EU generally, is fragmented capital markets. It's just harder for European companies, German ones included, to raise the huge sums needed for scaling up new tech compared to, say, U.S. companies.
Right. Access to capital.
Exactly. Which is why you hear calls for a deeper European capital markets union to make it easier to fund innovation across borders.
Okay, so that's the long-term vision.
Yeah.
But bringing it back to the present.
The outlook seems to be, well, government help might soften the blow, but a continued gradual shrinking of the traditional industrial base seems likely. It kind of aligns with what's happening elsewhere.
So less heavy industry, more focus on high tech.
That's the goal. Germany needs to boost its competitiveness in advanced tech.
Yeah.
And that might need more cooperation at the European level. Germany's probably better equipped to handle this shift than some places, but yeah, there are definitely still risks.
So wrapping this up, it sounds like Germany's industrial core is really being tested. Energy costs, global competition, these big structural economic shifts. It's a perfect storm almost.
Yeah.
Historically strong, but now needing serious adaptation, serious investment in new areas. And overlaying all that is the political sensitivity around those manufacturing jobs. It's complex.
It really is. And that leaves us with a final thought, really, for you listening. If these are the trends in Germany, what does it mean for other countries still heavily reliant on traditional manufacturing? Should they expect similar bumps in the road? What can they do now?
How do you balance protecting what you have versus investing in what's next? That's the billion-dollar question, isn't it?
Or maybe $1 trillion these days. It forces you to think about that trade-off between shoring up the old and building the new.